Good morning, everybody. Welcome to Monday, our morning meeting for the virtual hedge fund, Armor Investing Way. We're going to go over big picture risk monitor red and what that means, where we're going from here, our positioning from a macro point of view, and then we'll drill down into what stocks we own and what stocks are at the top of our whiteboard that we might position. So that's how this morning meeting is going to go. It goes like that, hopefully, every morning. Unless I get off on a tangent, which I guess often happens. I hope you guys had a great weekend. I was traipsing around Universal Studios parks with the kids, having a great time, for 48 hours and absolutely exhausted. So I need a lot of coffee, but it was lots of fun. All right. Don't forget, you're the risk manager of your own portfolio. I call this a virtual hedge fund because you have to take the responsibility to be that portfolio manager on the desk with me. So I'm going to share information, and then you figure out how it fits into your risk tolerance and your goals. I'm going to break it down for you into, what I think most investors should be doing, and then what I'm doing, okay, which is going to be more aggressive. I trade faster, so please understand that as we discuss what I'm about to say. So let's start with the risk monitor. It's still red. Let's just order our thinking by looking at weekly chart patterns of indexes. Okay. So the risk monitor is, our top 10 indexes, and we look at the behavior of those top 10, and we make decisions on how we want to run money using algorithms to tell us when to put on risk and when to take it off. Okay. So this is the S&P on the weighted index. There's no way to argue this. That uptrend that was started at the start of the year has been broken. And we know that this uptrend is led by 7 big cap stocks. So let's just rifle through the charts real quick. Okay. Maybe I'll blow it up just a little bit more. So we see the breakdown happen 2 weeks ago. Risk monitor went red 3 weeks ago, breakdown 2 weeks ago, down a little bit more last week. Here's the equally weighted index, right? Just no way to argue with that. That's a major top with a breakdown below all key moving averages. So just put in perspective what's going on here. There's the 50-day, the 200-day. Everything is headed south, the 25, the 14. So now we're locked into a real downtrend with the equally weighted index, which is right around flat on the year. Okay, most stocks are down on the year. There's 7 stocks that are holding up the market. Okay. That's just the picture. Risk monitor went red back here. So the risk monitor really nailed this sell-off. We got it right here. We got green here. Was willing to try to put some money to work. And as soon as it failed, with a tight stop, we go red. Okay. Let's swing over just real quick. I don't want to spend too much time on this. Just want to give you some perspective. What are the goalposts? There's the big cap tech stocks, which are the most important. This is the most important index. It's holding the whole market up. So what we have is kind of like a double top almost. I don't know what that is. I mean, kind of a rally up to test this high, and now the breakdown is underway. And the equally weighted, just to put a finer point on it, looks the same way. Okay. Small caps look terrible. As you can see, they never broke out. So small caps, the rest of the market, right? The small cap, they never broke out, and now they're headed down to the lows. Heaven forbid they take out the lows. I mean, that would just be a massive problem. Okay. And then there's the Dow, which really had a nice breakout here, and it's just died. And now it's breaking back down below all the key moving averages, right? And closed right near the lows. All right. So big picture, market looks terrible. Why? Well, look at bonds. Okay. Bonds are imploding. And I know some of you are, and I am too. We're all looking for, is this a double bottom? Should this be where we look to buy long bonds? First of all, we have an algo for that. So if the armrAlgo gives a risk on entry point in TLT, I'm happy to try that trade. I'm not going to get the low. I'm not going to catch a falling knife. It will knife down and reverse, and I'm willing to try to put a trade on if money comes in. I don't see that happening right here. I see volume selling as bonds make a new low. Huge volume bar, new low on a weekly level. This morning, bonds are down another 1%. So, real quick, we talked about this on the trading desk. Government shutdown. How does that affect the market? Check the Slack room. I gave you a historical, statistical point of view of what shutdowns do to the market. Generally, nothing. The market generally kind of goes up, actually. So I don't think it has any correlation whatsoever. I don't think it makes the market go up. I just think it tells you there's no correlation. It's just a sideshow. It's just noise. But bonds, in theory, if there's a shutdown, it suggests fiscal responsibility. It suggests the Fed won't keep raising rates in the midst of a government shutdown. So theoretically, it's bullish. So when they kick the can down the road on Saturday and give it another 45 days, it's bearish. That's just theory. That's just the algos. That's how they're trading it. So when they kick the can down the road and gave it a 45-day extension, bonds go down, because then it's back to normal, right? Everything's nothing's changed. And if nothing's changed, then what we're looking at is a Fed that's going to raise rates in November. That's what the market's telling you. And so bonds keep going lower. All right. That's the big picture. What's the highlighted action of last week that was really strange to me and really, I don't even know how to explain it, but it's highlighted and we have to take a look at it. Silver is in the midst of an implosion, and the trading behavior is bizarre. Okay. It gapped up. Silver all by itself on Friday was up 4%. Now, Friday was the end of the month, end of the week, end of the quarter. So I don't know what was going on there, but it was a 4% gap up in the morning with a collapse at the end of the day and selling off another 3% this morning. So silver is toast. As an aside, a rule on this trading desk is we never, ever buy precious metals on a gap up in the morning. And if you don't believe that statistical fact, if you want to debate it, just look at what happened Friday morning. Don't ever chase metals gapping up in the morning. You've got to get past 1 o'clock before you can believe anything you see in the metals. And if you have to pay up for it, so be it. That would be great. Pay up for it at 1 o'clock. It's skyrocketing, huge week, blah, blah, blah. That's how metals are to be traded. Don't ever believe anything you see in metals in the morning. Okay? So, but that's a trading point of view. I just want to show you this chart, and I don't really understand why it looks like this. I can't really explain to you what's going on. I just wanted to highlight it because we have to think about what's happening. And if I come up with something actionable, I'm going to come back on here in the morning meeting. I'm going to share it with you. I've been ambling around, Universal for 48 hours. So I just got back to my desk. I'm just doing some work this morning. I'm preparing the captain's log. I'm having this conversation with you. I'm looking at these 3 charts, and I'm not exactly sure what they're telling us. But my gut reaction is something is not right in the financial markets. The simple reaction is gold and silver are getting wrecked because the strength in the dollar is just getting too strong. And so it's an easy wrecking of gold and silver. But why is Bitcoin going up? I can't figure that one out. Bitcoin's up 4.5%. It marches to the beat of its own drum. It's not correlated to gold and silver. That's pretty clear. I'm not showing you Bitcoin because it's a replacement for gold. That's not the conversation. They're 2 completely different assets. Gold and silver are very much tied to the dollar, and this is what the dollar is doing. Okay, so the dollar is just in a screaming uptrend. It's just crushing it. I mean, it's just crazy, and it's up another 0.4% this morning. This is what the dollar has been doing on a weekly level. Wait a minute. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11 weeks in a row, the dollar is screaming higher. So on the one hand, you would look at this chart and you'd say, well, I mean, the metals just can't take it anymore. The dollar's just gone berserk. When I see Bitcoin starting to go up, it's up 4.5% this morning. And you can see this chart here. One weekly chart's making a higher low, right? Making a higher low in some type of basing formation. And these two charts are, making a breakdown of, this would be a breakdown, a massive breakdown of a huge pennant in silver. So that's like god awful. That's like good night nurse right there. Okay. Gold just broke down last week. It didn't have the rally in the morning. It just went straight down. This is what gold is, gold looks like right now. That was the weekly bar, and then this is the daily candle. I mean, just down, straight down, bang, bang, bang. Okay? And gold is looking to open down over 0.5% this morning. So Bitcoin has always been a risk-on asset, so it makes no sense that it's up right now other than whatever trading shenanigans. But I say let's keep our eye on it. If Bitcoin were to break out above 30,000 or something and the rest of the market's tanking and gold and silver are tanking, I don't know. Is it finally becoming an asset people are hiding in? I don't know. But I just wanted you guys, those are the highlighted charts this morning. And it was a big fight between highlighting those three charts or highlighting XLU. Okay. XLU is in an absolute free fall. I mean, just incredible. And I highlighted this last week, so I didn't highlight it this morning, but huge volume down week on utilities. These are not normal moves. And these types of moves on all these different assets. So we have this wild run in silver that craters. We have a collapse going on in utilities. We have, how many weeks did I just say that the dollar was up? Or days did I say? How many days did I just say? Whatever it was. These are not normal moves. And the flip trade worked last week. Got on a long trade, made a tiny amount of money on the NASDAQ, and it broke down. I started buying puts. Market cratered. Booked my profit in puts. So now let's move over to why, what my position looks like, and why am I max negative right now? Like whatever that is, max cash. So most assets I run are just holding short-term Treasury bills, not even money markets, just Treasury bills themselves. Just as a point of fact, every brokerage firm is different, but a lot of brokerage firms don't pay interest on the first 10,000 in a money market, but then they start paying interest. So you got to see the look in the fine print and make sure you're getting paid on your cash. And if not, just go buy a U.S. Treasury bill. It's 5.5%. It's easy. You just call your broker if you don't know how to do it. It's a simple thing. It costs nothing, and it's the most liquid market in the world. So make sure you're capturing all you can in your cash balance through owning treasuries. So what am I doing personally? Why am I so first of all, most of my assets collecting yield in Treasury bills, which is as conservative as I'm ever going to be. And let me give you some statistics that like knock your socks off here. Okay. Since the Fed started raising rates, a record $870 billion of deposits have left U.S. banks. This is the biggest deposit flight in U.S. history. That's nearly $73 billion per month or $2.5 billion per day. The money market funds have seen nearly $1 trillion of inflows over the last year alone. People are saying that's the new safe trade. My question is that new? Money markets have always been a safe trade. I don't know about that. Okay, bonds are down over 15% over the last 3 years, the largest 3-year decline in history. So bear markets are kind of like boiling the frog. You know, you put the fry in, it slowly start turning up the heat, and the frog doesn't know it's being cooked until you got the heat high enough, and then it's cooked. Like that's kind of what bear markets are. People keep making excuse after excuse after excuse after excuse, and then the 7 big cap stocks go up, so it masks the destruction going on in the rest of the market, and don't worry about it, it's okay. And then all of a sudden, the market implodes. That's just how bear markets are. So I'm as negative as I'm ever going to get. And personally, I'm short and I own puts on the market. Now, I hesitate to tell you that because you cannot follow that and then walk away from your desk. The market craters in the morning. Very often I book my gains on the short side. I'll sell puts and I'll wait to put the trade back out on rallies. So you know, I'm a very aggressive trader. Sometimes I hold them overnight. So I'm short overnight. That's true. I have some shorts overnight. But if we get a market that craters early Monday morning and then looks to bottom and we get a buy trigger, let's say on the S&P and the NASDAQ using our day trading algo, I'll go put profits everywhere and step away. Look to put the trades out higher. Put the trades out at the end of the day lower if I have to. The market's imploding. I don't know. We'll see. But I'm sharing with you what I'm doing personally. But please, please understand that by the time this video is over, an hour into trading, I could be back to 100% cash, no short. So, okay, I hope I've made that clear. Why am I willing to short? And I have not been willing to short with you guys since 2020 when we first started talking to each other. I started this in 2019. I mean, I always say to you guys, forget about shorting, which is true for most investors. Just forget about it. Collect your 5.5% and wait for the risk on green signals. We'll catch a signal and we'll make a lot of money and our net worth will be protected during the collapse. That is the way most investors, in my opinion, should be positioned. I'm going to try to make a little bit of alpha being short. I'll never get more than 30% short. So 70% Treasury bills, I might use 30% of my capital and put it out through puts or twice. So I'm right now on the spreadsheet, I'm just using the inversion 2 times, the Dow 2 times, the small cap 2 times, the real estate index. Those 3 assets I put on the spreadsheet with stops so you can follow along easier than me shorting and all this kind of stuff. So I'm going to trade those with you. And I own puts. You got to figure out your own put there and how if you want to do that. I'm just sharing with you what puts I own. Okay. I shouldn't say that. I'm sharing with you the assets that I'm buying puts on, and you figure out what put you want. Another reason why I'm willing to go out and start shorting is what's been holding up the market. Okay. Are these stocks? And you tell me how they look to you now. There's Apple. There's Amazon. How do they look? You want to get long these assets? That Google's holding up. Meta's holding up. Meta's the only one holding up. Microsoft. Nvidia. Well, Nvidia's holding up. And Tesla's down 4% this morning. So that's going to be a red bar. If we drill down and look at the daily chart, so that looked like it was going to be good on Friday, and now it's going to be down 4% this morning. So I don't know where that's going to end today. Nvidia tried to rally, close below the 50. Microsoft's in no man's land. Meta's the only one worth buying to me as it stays above the 50. Google, Amazon, and Apple. These are just not chart patterns of a market that's about to break out to the upside. Then I layer on this massive run in the dollar, the collapse in treasuries, the implosion in utilities, the bizarre behavior in commodities like silver. Now for me is the time, since the risk monitor's red and I can do it, for me to have some short out. So those are my thoughts. Those are my thoughts for today. If you wanted to see the bond market, this is my one chart at the bottom here. U.S. aggregate bond index rolling over 3-year returns, down 15% in the last 3 years. God, that's crushing people that think protecting capital by buying long bonds makes sense. You know, that 60-40 portfolio, it's just getting destroyed. Okay. So, I wish you all the best of luck today. I'll see you on the desk at 9:30. We'll start trading. 2/3 of my personal capital, I'm trading the S&P and the NASDAQ 100 using our day trading portfolio playbook. A third, or like 30%, I've got out in various short situations in my macro fund. And then I've got nothing in my Armor Power Play portfolio. It's 100% Treasury Bills. Okay? So that's my allocation. You figure out what works for you, what your risk tolerance is, goals, and all those types of things. I can't wait to work with you guys. Everybody have a great trading session. And remember to be the smart money. After you've listened to everything, figure out your strategy and be the smart money. Okay? Take care, guys.